You've heard this story everywhere. The government printed money during the pandemic. The dollar got debased, inflation followed. Easy explanation. Everybody nods. Most of that story is wrong. The Federal Reserve didn't print money the way you think. The Treasury didn't issue dollars the way you think. The inflation that came afterward came from a different mechanism. And the lie about what actually happened serves a very specific purpose. It distracts you from what the Fed actually did, which is more important and more permanent. Today, the money printing narrative is on trial. 7 specific lies about what really happened in 2020 and 2021. By the end of this video, you're going to understand more about how money actually works than 95% of the people in your office. Sit down, court is in session. Welcome to Capital Court. I'm not a financial advisor. I'm not on television. I don't work for any institution that benefits from confusion about how money works. If you want to understand the system that runs your financial life, hit subscribe. New case every single day. Now, the defendants, the Federal Reserve and the United States Treasury. 7 lies. Let's begin. Exhibit A. Lie number 1. The government just printed money and sent it to people. Stimulus checks. 3 rounds. $1,200, $600, $1,400. Yes, these happened. Yes, they were real dollars. Yes, they were sent to households. But here's what most people miss. The Treasury didn't conjure those dollars from thin air. The Treasury issued bonds. Investors bought those bonds. The Treasury used the bond proceeds to send the checks. The money already existed in private hands. It was rerouted to households through a debt issuance. This is fiscal policy, not monetary creation. It's the government borrowing from the public to give the public a one-time payment. The deficit went up. The debt went up. But the total amount of money in the system didn't expand by the stimulus amount. The verdict on Exhibit A, guilty. Exhibit B. Lie number 2. The Federal Reserve printed money to fund the stimulus. This is closer to true, but not in the way most people imagine. The Federal Reserve did expand its balance sheet by about $5 trillion from 2020 to 2022. That's real. What did the Fed buy with those new dollars? Treasury bonds mostly, mortgage-backed securities secondarily. From whom did the Fed buy them? From large institutions, primary dealers, banks, hedge funds? The Fed credited those institutions' reserve accounts in exchange for the bonds. Those credits are not money in your pocket. They are not even money that can leave the banking system without further action. They sat on bank balance sheets. They mostly sit there still. The Fed didn't print money for stimulus. The Fed printed money for the banks who already had money. The verdict on Exhibit B, guilty. Exhibit C, lie number 3. All that money flooded the economy and caused inflation. The Fed's reserve creations did not flood the economy. They flooded the banking system. The transmission mechanism from bank reserves to consumer prices is broken in modern banking. Banks don't lend out reserves the way they lend deposits. Lending is constrained by capital and credit demand, not by reserve levels. The inflation that came in 2021 and 2022 came from a different place. Direct fiscal transfers to households, supply chains broken by the pandemic, pent-up demand colliding with constrained supply. And once prices started rising, corporate margin expansion piled on top. The Fed's balance sheet expansion played a supporting role through asset prices. It did not play the lead role through consumer prices. The verdict on Exhibit C, guilty. Exhibit D, lie number 4. The Fed's money printing devalued the dollar against other currencies. Look it up. From 2020 to 2022, the dollar strengthened against most major currencies. The DXY index, which measures dollar strength against a basket of trading partner currencies, rose roughly 15% during the supposed money printing era. If the Fed had genuinely flooded the world with dollars, the dollar should have fallen against other currencies. It didn't. It rose. Because what the Fed actually did was technical balance sheet expansion that mostly stayed within the banking system, not currency creation that hit foreign exchange markets. The verdict on Exhibit D, guilty. Exhibit E, lie number 5. Quantitative easing helps Main Street. The official line on the Fed's bond buying program is that it lowers interest rates, which makes mortgages cheaper, which helps families afford homes. What actually happens? Lower interest rates push up the prices of assets, bonds, stocks, real estate. The people who own those assets get richer. The people who don't own them, including most working households, face higher prices to buy in. A first-time home buyer in 2021 faced lower mortgage rates and a 30% higher home price. The lower rate did not make the house more affordable. It made the seller richer. Quantitative easing transferred wealth from buyers to sellers, from renters to landlords, from workers to owners. This is documented. It's not controversial among economists. The Fed knows. The Fed publishes the numbers itself. The verdict on Exhibit E, guilty. Exhibit F. Lie number 6. The Treasury and the Fed are independent of each other. In theory, the Treasury manages fiscal policy and the Fed manages monetary policy. They're separate institutions with separate mandates. In practice, during a crisis, the Fed and the Treasury coordinate so closely that the line between them disappears. The Fed buys the bonds the Treasury issues. The Treasury Secretary and the Fed Chair meet weekly during stress periods. The same group of investment banks serve as primary dealers for both. This is a feature, not a bug. It's how the system handles emergencies. But pretending the two institutions are independent obscures who actually decides what gets funded and on what terms. The answer in practice is a small group of people who are not elected and not accountable to anyone you can vote for. The verdict on Exhibit F, guilty. Exhibit G. Lie number 7. The lessons have been learned and we won't do it again. After the 2008 financial crisis, the Fed expanded its balance sheet by about $3.5 trillion. We were told this was a one-time emergency. We were told the Fed would unwind it. The unwind didn't happen. The balance sheet stayed elevated. Then 2020 hit. The Fed added another $5 trillion. Now we're told the same thing. This was a one-time emergency. The Fed will unwind it. It won't. The pattern is permanent. Each crisis ratchets the Fed's balance sheet higher, and the unwind never comes. The verdict on Exhibit G, guilty. So what does all of this mean? The money printing story is a distraction. The actual mechanics are different. The Fed protects banks during crises. Congress sends checks to households when politically necessary. The two get mashed together in the public mind and called money printing. Meanwhile, the real game is asset price inflation, stocks, real estate, bonds. Those go up when the Fed expands its balance sheet. The people who already own them get richer. The people who don't get poorer in real terms. The wealth gap widens with every cycle. You weren't supposed to understand the difference. The fake explanation, the printer goes brr meme, is much more politically useful than the real one. You weren't supposed to know that asset price inflation is the actual transfer mechanism. Now you do. The verdict of this court. The money printing story is a useful lie. The truth is that the Fed protects assets, Congress protects political incumbency, and ordinary people pay through asset price inflation that compounds over decades. Now you know. If this changed something for you, hit subscribe. New case every day. Tomorrow we put your bank's business model on trial. You're going to learn that you are not the customer, you are the product. While the Fed plays its games, here's one thing you can do today. In the description below, you'll find a brokerage that lets you buy treasuries directly without paying anyone a fee to do it for you. Affiliate link. Use it if you want to support the channel. Court is adjourned. See you tomorrow.